Welcome to the tutorial on business ethics. Today the chapter is corporate social responsibility. It is indisputable that business has a social responsibility to obey the law. Economists might also say that business has a social responsibility to produce the goods and services that society demands. If a firm fails to meet the society's interest and demands, it will fail. That's why, to avoid the failure, a corporation or a business should follow the social responsibility to get a sustainability in the operation. Definition of corporate social responsibility. Before knowing the definition, we should know what is responsible or responsibility. In one sense, responsible means the cause for an event or action. In other sense, responsible means ethical connotation. When we say that business is responsible to someone or for something, we are referring to what a business ethically ought or should do. Corporate social responsibility refers to the ethical expectations that society has for business. Ethical responsibilities are those things that we ought or should do, even if sometimes we would rather not. That means ethical responsibility indicates the ethical expectations from the business by the society. Again, we can see corporate social responsibility is concerned with the society's interest that should restrict or limit business behavior. As a socially responsible corporation, the business should fulfill the interest of the society. To fulfill the demand or interest of the society, there may be some economic cost. Different levels of responsibilities. There are three different levels of responsibilities on a scale from less to more obligatory. That means if we consider the level of obligation, there are three types of responsibilities. The first level is there are ethical responsibilities to do good. That means this first level has a less obligation, and that obligation indicating to do good. Volunteering and charitable work are typical examples of responsibilities in this sense. That means voluntary work or charitable work can be considered as a responsibility which has less obligation. That means voluntary or charitable work is a optional responsibilities. This volunteering and charitable work are not mandatory by the law or any other obligations. As per example, in the sense of corporate philanthropy, when a business sponsors a charity event or contributes to a school project, that kind of social responsibility can be considered as the first level responsibilities. That means the responsibilities to do good. The second level of responsibilities can be considered as more obligatory, and this second level responsibility requires to prevent harm. As for example, we can say legally you can use fossil fuels, but to prevent harm you can use renewable energy. That type of responsibility is considered as a second level obligation in considering the responsibilities for a business. The third level of responsibility, indicating the most demanding sense of responsibility. In this sense of responsibility, you are bound or you are compelled to act in a certain ways Otherwise, you may face the punishment. As for example, we can say a business should not sell a product that causes harm to consumers, even if there would be a profit in doing so. That means anything that is mandatory to follow, or you are bound or compelled to act in a certain ways, those responsibilities is the most demanding responsibilities. Corporate giving programs to support community projects in the arts, education and culture are clear examples. The third level responsibility is one kind of mandatory responsibility, otherwise you can face the legal punishment. Models of corporate social responsibility. We can see there are three models. The first one is economic model of corporate social responsibility. Second one is stakeholder model of corporate social responsibility. And the third one is integrative model of corporate social responsibility. The economic model of corporate social responsibility indicates that primary responsibility of management is to maximize the profit within the law. Management can choose from two options. One choice is you can contribute to the society as a matter of philanthropy. Here we can see contribute for reputational purposes. Social responsibility contributes to profitability. Another choice can be focusing on social responsibility. In that case, contribute because it is the right thing to do. Second model is stakeholder model of corporate social responsibility. This model indicates that business is embedded with a web of social relationship of mutual rights and responsibilities. Business managers have responsibilities to a range of stakeholders. All the stakeholders like customers, employees, suppliers, creditors, lenders, that means any stakeholder who are related to the success or failures of the business. The third model is integrative model of corporate social responsibility. This model indicates that social responsibility is integrated directly into the mission and purpose of the corporations. That means whenever you are designing your mission and purpose of your corporation, you should integrate all the aspects like sociological aspects, environmental aspects, sustainability aspects. All the issues should be integrated. Economic model of corporate social responsibility. Now we are going to discuss in details about the economic model of corporate social responsibility. The economic model of corporate social responsibility indicates that businesses' sole social responsibility is to fulfill the economic functions they were designed to serve. That means, in this economic model of corporate social responsibility, it is believed that managers are the agents of the business and their priority should be on fulfilling the economic functions to meet the demand of the owners or the stockholders. That means, in this economic model of corporate social responsibility, the main focus is on the shareholders' interest. And as an agent, the manager will serve the shareholders. That means managers have a primary responsibility to pursue profit within the law, and this economic model of corporate social responsibility believe that profit is the indication of efficiency by which the company is producing the goods and service that society demands. We have already learned that in economic model of corporate social responsibility, the manager as an agent will focus on the interest or demand of the shareholders, but they can also contribute to the social causes as a matter of philanthropy. That means they can perform social responsibilities, but those responsibility has no strict obligation, but they can do as a good thing. Within the philanthropy offshoot, there are occasions in which charity work is done because it brings the firm good public relations, it provides a helpful tax deduction, and it builds goodwill and or a good reputation within the community. That means in economic model, the main focus should be on increasing the profit, but they can do philanthropical work for the purpose of bringing the firm good public relations or to provide helpful tax reductions or to build goodwill and or a good reputation within the community. For that purpose, the corporation can sponsor in sports or the arts, or the corporation can contribute to the community events which will ultimately benefit the business. If we summarize the economic model of corporate social responsibility, we can say that the main focus is on the increasing profitability, but the managers can do philanthropical work for the purpose of increasing reputation, which will increase the financial benefit. That means as a agent, the managers should focus on the interest of the owners. That's why they should allocate resources for increasing the profitability for the owners or the stockholders, but they can also allocate resources for philanthropical work if those investments ensure greater returns. The second model of corporate social responsibility is the stakeholder model. In the stakeholder model of corporate social responsibility, we believe that business managers have ethical responsibilities to a range of stakeholders. On the other hand, in economic model, we have learned that managers should increase the profitability for the stockholders, but in stakeholder model of corporate social responsibility, we believe that managers have a responsibility to a wide range of stakeholders. The stakeholder model holds that businesses exist to create value for a range of stakeholders such as employees, customers, suppliers, local communities, investors, as well as the stockholders. Business managers have responsibilities to all those who have a stake in the success or failure of the company, not only to those who have invested financially. In considering the stakeholder model of corporate social responsibility, managers should perform ethical responsibilities to wide range of stakeholders such as employees, customers, suppliers, local communities, investors, as well as the stockholders. Under this stakeholder model of corporate social responsibility, the business has a social responsibility to respect the rights of its employees, even there is no requirement by the law. As for example, we can say by this social responsibility for the employees, we can ensure right to safe and healthy workplaces, right to privacy, right to due processes. So these are the issues which can be maintained as a result of social responsibility arises from the theory of stakeholder model of corporate social responsibility. And this can also be applicable for the another stakeholder which is called consumers. In that case, we should ensure safe products and truthful advertising, even though those issues are not specified in law. That means in stakeholder model of corporate social responsibility, we focus on the interest or demand of the all stakeholders. It may be employees or it may be customers or any other stakeholders. The stakeholder theory or stakeholder model simply acknowledges the fact that the management should balance the ethical interest of all the affected parties. That's why this stakeholder theory or stakeholder model is ethically superior model comparing to the economic model of corporate social responsibility. But in this stakeholder model, since the managers need to focus on all parties, in that case, there may be variety of responsibilities. And for that variety of responsibilities, there may be some competing and conflicting responsibilities. In that case, the managers should prioritize the required responsibilities from the competing and conflicting responsibilities. The third model of corporate social responsibility is integrative model of corporate social responsibility. In this integrative model of corporate social responsibility, it is believed that in the purpose and mission of the organization, the managers should integrate various sustainable issues. That means, in integrative model, the managers should focus on sustainability by considering the ecological and environmental sustainability as well as the social responsibility. Sustainability offers a model of corporate social responsibility that suggests that ethical goals should be at the heart of every corporate mission. And day by day, this sustainability theory is growing importance in the discussion of corporate social responsibility. Sustainability requires that a firm's financial goals must be balanced against and perhaps even overridden by environmental consideration. If a firm only considers the financial bottom, in that case the firm may not see the success, because to get the success, the company should also consider the ecological as well as the social bottom lines. If a firm is environmentally unsustainable, the firm will financially unsustainable. That's why the sustainability version of corporate social responsibility suggests that the long-term financial well-being of the firm is directly tied to questions of how the firm both affects and is affected by the natural environment. A business model that ignores the biophysical and ecological context of its activities is a business model doomed to failure. That means, if a business does not consider the biophysical and ecological context, the business may fail at a time. Role of reputation management as motivation behind corporate social responsibility. What is reputation management? Reputation management is the practice of caring for the image of the firm. If a business does not serve the society, society will no longer tolerate the profits or the existence of that business. That's why there is a logic that suggests corporate social responsibility not only provides benefits to the society, but it also increases the reputation of the corporation. That's why company should manage the reputation for increasing the benefit of that organization. If the company can manage the reputation of the firm, it can ultimately improve the profitability. If there is a good reputation, it will build a trust from the consumers. In that case, if there is a slack, the consumers will not show any negative attitude because they believe in the reputation of the firm. But if a company has a negative image, that image may stick regardless of what good the corporation may do. That means, if the customers has a negative image, if there is a little thing, they will certainly believe that the company is a bad company. Here we can see a figure of reputation management. There are 6 dimensions of corporate reputations. Those 6 dimensions are emotional appeal, products and services, financial performance, social responsibility, workplace environment, vision and leadership. There should be expert reputation measurement as well as the powerful reputation management to increase the sales, to secure talented employees, to earn investor confidence, to create business growth, to gain market leadership, and to build stakeholder loyalty. That means by managing the reputation, there can be a lots of benefit. That's why role of reputation management can be a motivation behind corporate social responsibility. Corporate social responsibility is good for business. There is evidence that good ethics is good for business. A firm might suffer if it does not live up to its corporate social responsibility promises. But one should not invest in corporate social responsibility when the consumers are not willing to pay higher prices to support the investment for that corporate social responsibility. There is a research, the findings of that research shows that firms that were ranked highest in terms of their records on a variety of social issues had greater financial performance. That means if a firm is ranked considering the ethical issues, that firm has a greater financial performance. And those financial performance are in terms of operating income growth, sales to asset ratios, sales growth, return on equity, earnings to asset growth, return on investment, return on assets, and asset growth. Another study shows that if a firm has a code of conduct, that firm will outperform in the perspective of economic value added, market value added, and the price earning ratio. That means the higher performance can be translated into significantly to the following issues such as more economic value added, a less volatile price earning ratio, 18% higher profit or turnover ratios. In conclusion, we can say that it is impossible to engage in business today without encountering and addressing the corporate social responsibility. Despite substantial differences among companies, research demonstrates that almost all companies will confront corporate social responsibility issues from stakeholders at some point in the near future. Thank you.